Hello and welcome to another daily market update. My name is Ben and we're going to take a look at the Apple stock today. Apple is in a very interesting position. I think we are going to see a pullback potentially, and these pullbacks can be opportunities. So we don't want to lose any time. We're going to take a look at the chart now. So we are currently on the dailymarketupdate.com website. Here you can register for free. You get additional updates every single day. If you do so, you see all these asset classes. We provide updates for additional stocks, cryptocurrencies, and so on. So feel free to check it out. It's, in my opinion, a no-brainer. You get all these updates completely for free if you register on the website. So what we do now, we take a look at the stocks section here and we click on Apple. These are the ones that we've updated most recently. Let's take a look at Apple. And I want to start on the one-day chart first. Makes sense to get an idea of the bigger picture first. So let's click here on the one-day chart. We hide the text. And here you can see why I said we might see an opportunity come up here. Because on this one-day chart, which starts sort of, end of 2023, you can see that a fourth wave pullback completed it starts end of 2022 actually, at around $124. So from there, and this is always what we look for as Elliott-Wavers, we are looking for a 5-wave pattern. And you can see on the chart, we've seen that 5-wave pattern. So magenta waves 1 to 5. 5-wave move is an impulse, and impulsive movements can be opportunities because after such a 5-wave move, we normally get the pullback. And these pullbacks, especially for pullback traders, can be interesting. We know that when we use the Elliott-Wave method and we identify the wave structure, and we know that, for example, we've just completed, as in this case, a wave 1, that the wave 2 will typically be a deep pullback. And typically we're then looking for the 50% retracement to the 78.6 retracement. You see these in this case on the chart as trading area between $161.90 and $140.32. So that's the main support area that with a very high probability the prices should dip into and then from there reverse. And it's not so much about picking the exact level where it will turn around, but it's more an area. And based on probabilities, we should see the price turn around in this area. Now, it would be great if we could see the price dip into that area because at the moment, price has not yet touched it. It came very close. Okay, you can see here the last swing low was at $164.08 after all 5 waves completed, magenta waves 1 to 5, in dark green wave 1. And then this sort of dark green wave 2 is still unfolding. At least this is the preferred scenario. And it would be ideal if the price could dip once more into this area. We would have to assume that the correction is already over a little bit earlier than expected. If we see a break above $198.23, I have to say, however, in both cases, we would expect the price to rally in a third wave afterwards. So that means either directly or after another dip into the support zone. So we're still looking for a continuation of the overall uptrend as long as the $140.32 level is holding. A break below it will not invalidate this overall bullish thesis on the Apple chart, but it would make it less likely and less reliable because we know that most of these patterns fail if there is a sustained break below that 78.6 retracement. And the invalidation point is down here at $124.17. I mean, that's the level where really, black and white, it's invalidated. Okay, so this is where an alternative will come into play. But as I said, already below the trading area, which is why risk management is so important. It's all about probabilities. Markets are non-linear. They can change direction quickly. We always have to adapt. Markets are flexible. We have to be flexible with our analysis. So, it's just that probabilities shift below that area. Now let's also take a look at the 2-hour chart. Here you can see the detailed wave count. Currently, preferred scenario is that the move down initially here to $164.08 was just the A wave of that wave 2. And we see that as highly likely or very likely as preferred with a 65% probability that this was only magenta wave A. We're now in a B wave rally and we're looking for a C wave decline and then the market to dip into this trading area From there, then we're looking for a third wave rally to the upside. However, with a 35% probability, if the market rallies directly straight away to above $213.20, then we'd say, okay, the alternative comes into play. That is wave 2 already bottomed. Now, why this level up here, $213.20? Well, it is the 138.2 Fibonacci retracement of the move to the downside of this A wave. Typically, guidelines suggest that a B wave, and you can see that we are currently in this B wave rally, that's the assumption. Such a B wave is not invalidated above the 138.2% retracement level of the A wave, but it will become far less likely and far less reliable. So that's when probabilities again start to shift, and we would make the alternative scenario the primary count. And therefore it's so important to watch that level as key breakout point or resistance level, and basically a marker for sentiment. Yeah, that's the update for Apple, or about Apple. Hope you enjoyed the update. As I said, if you are interested, register on the website. You get all these updates for free. Also, please leave a like, subscribe, and please also leave a comment. Let me know in the comments which cryptocurrencies, stocks, or other assets you want me to analyze for you. Thank you very much. Bye-bye.